Epstein with your morning flash update, and this update is for the morning of Friday, the 29th of July. Hard to believe July's behind us. Wow. 2022, 8:30 a.m. Central Time. And I'm looking at the markets, and I've looked at this rally, and I've just got to tell you, it's a nice rally, but I think it's a bear market rally. I think the market's still on line to come right back down and punish traders that get overly bullish here. In fact, you shouldn't be bullish. I've told my traders on markets like this is a great rally to lighten up and get rid of things you don't want to own that they've climbed back up. Probably a good time to do some of that. Metal markets, well, you know, they're questioning, and rightly so, the Fed. Just what can they do? How much more can they raise interest rates? And that becomes the problem. You know, don't misspeak what happened this week. The Fed chair made it clear he's still fighting inflation, and he's going to fight inflation. The problem we all have is how much can he do? You have 2 quarters of GDP that lost back-to-back. Semantics aside, you got a slowing economy. How far can you raise rates without tipping it into something much worse than that? That's the real problem there. OPEC Plus, fully agreeing to one thing, and they're very, very adamant about it. They're going to stick together. Look next week for them to come out, and they'll be telling you what they're going to do with quotas. There's not much they can do. They just don't have the power to raise quotas a lot and meet what they say. In the grain markets, I've warned you, there's some hot weather coming at you. Be careful. This is the key time for these grains, and they're all responding to that. Currency markets, no. I have a problem with the rally that you've seen recently in the euro. I'd be watching that. I think you can crack under the 100 level given some time right here. Now, when we look at the economic data of the day, let me step over here, and we'll go to that right now. There we are. Personal income and spending. We have a bit more money, but if you look at the numbers, they're running hot on the price index, the employment cost index. Employers are having trouble with this. There's a point where you can't pass on these costs or absorb them. You got to pass them on, and there's a point where the public doesn't buy your product. That's what you've got a problem with. Chicago PMI comes out at 845. The final University of Michigan Consumer Sentiment Index comes out today, too. Now, in terms of what I'd be looking at, let me get over here and see what we've got. The Eurozone CPI estimates. 8.9% versus an 8.6. That's a hot number. It weighs on that market. Core estimate, up 0.2. GDP, second quarter. Well, that's much stronger than the market thought, as you can see, in all parts. So they did better there, but their expenses are still up too much. Energy prices, they're at the mercy of what is going on in Europe, and that just can't wear well for them. So I'd be very cautious on all that. Now, before I leave you, I won't be here next week for a number of the updates. I've had for a while some scheduled surgery since the beginning of the year, oral, that has to be done. I wish it was just a root canal. And they tell me that I won't be able to speak probably right for a couple of days as my mouth will be swollen, so they recommend that I stay away from doing my podcasts, anything that I do like these. So I'll be doing that. I can write, I can do other things. Obviously, it's just going to be the swollenness of this that they want, and they don't want me to burst the stitches that I'll have. So you'll miss me for a few days. As soon as I'm comfortable to come back, I will. Just be a couple of days that I'm assuming could be the better part of the week. We'll see. I'm Ira Epstein. Thanks for watching, and I'll catch you all either next week or the week right after. Take care now.